Welcome back to this episode number 114 of Your Next Trade. So I hope you had a good summer. This morning I received tons of emails and people telling me about their winning trades over the summer. We had many trading educators telling you how to trade from the beach. Unfortunately, I didn't have the time to do it. I just wanted to chill. I had a good summer. I hope you had a good summer. So let's go back into the market and what happens on Friday with Powell at Jackson Hole being a bit more dovish than usual. So the question is he really caving? So Powell caved. That was, a lot of newsletters telling you that he caved. But if we look at the Fed expectation from the Fed fund rates in September, the expectations are still around 75 to 80% from a cut, as we can see here. And actually, it's a bit lower than what it was on Thursday and before. So the first move on Friday on the headline of Powell saying that actually the employment, or should I say the unemployment, is not as good as what he was expecting not so long ago. But in the meantime, there is a bit of inflation. So if you look at the NFP numbers, which is a lagging indicator, it is clearly showing that the job market in the US is slowing, roughly 30 to 50,000 jobs created over the last 3 months on average. But in the meantime, inflation is picking up. So we had several headlines from the ISM PMIs telling us that the prices are going up as well. Walmart, we had the numbers that was on Thursday where the stock didn't react very well. But what was interesting is they were saying that inflation is coming, and due to tariffs, we're going to see in the next 3 to 6 months more inflation. So on one hand, if you look at the dual mandate of the Fed, it is clearly showing that unemployment is picking up, or actually the employment is slowing. But in the meantime, we have inflation. So a bit of a conflicting report. If you want to be Powell, you kind of pretend that you're caving because you don't want to have Trump and his administration going after you every single day, but you don't want to repeat the mistakes that you did in 2021, 2022, when you had massive inflation. So as always, I want to start with the year-to-date asset performance. And as we can see here, we have double digit for most of the stocks indexes, where the S&P is up 10%, NASDAQ 11%. But what is interesting in the meantime, the dollar is down 10% on the year. So if you are a worldwide investors, what you're going to see is the debasing of the US dollar versus the rest of the currencies. And actually, US has been underperforming the other markets FX adjusted. I added back again the Ethereum for the crypto world because, if you've been looking at that space, obviously, you've seen the massive move since the stable coin or the Genius Act that was voted at the start of July, and literally stable coin is going to be big for Ethereum, and we move from 3,000 to 4,800. Bitcoin still up 25% for the year, pretty much the same as gold. If we look at the week-to-date asset performance, so you could say that actually S&P, NASDAQ are flattish for the week. The most important part from that chart is the actually the Russell 2000 up 3% for the week. Very strong week, very strong day on Friday with the dovish talk from the Fed, from Powell, that should benefit the small and mid caps. As we're going to see today as well, there's been a lot of rotation over the last couple of weeks. So the big tech have been underperforming. So Ethereum up 10%, but talking about the week to date and how the rotation is showing, looking again through the lenses of the performance. As you can see, left-hand side, what you do have is social media, which is mostly Meta, but you're gonna have technology, NASDAQ, semiconductors, all went down on the week. And on the other end of the spectrum, you get regional banking, bank, but Russell that is here. So small mid cap, this is a talk, this is a trade that we started to put at the start of July. We have been saying that it should be catching up. We talk about calls on the Russell 2000 that's been doing pretty well. And as you can see, S&P is roughly flattish for the week. So not that many underperformers, but those underperformers, those are the big weightings. of the indexes. We are talking for the S&P and the Nasdaq. They are making 40% of the indexes, and the rest, as you can see, lots of outperformers and sectors, industries that have been doing well. This is the same if you look at the week-to-date sectors performance. As you can see, only IT is down on the week with telco, but overall, really a rotation going on in this market with a widening of the strength of this market. What about the rate? So we are still at 426% on the US 10-year, so we are not really coming down that much. The trending range is still 4.2 to 4.5%. As long as we're going to have the fear of inflation and this budget deficit that is still massive in the US, that means a lot of bond supply coming. That creates higher yields for meeting the demand. Fed funds rates, so looking at September, this is the same picture. We are talking between 80 to 90% expectation of a Fed cut in September. Looking at December, we are now talking about 2 cuts. So if you go backwards and if you look at the different videos that we did in January, that was more or less the expectation at the start of the year. And this is actually what the Fed has been saying for month and month to the dot, where the expectations were for 2 cuts in 2025, where the first one in September and the second one of December. So we are back to that scenario with 2 cuts in 2025. What about the VIX? Looking at the VIX, unfortunately, I should do that. That's going to be helping you. The VIX 14%, so we are way below the 15%. There is compression in volatility due to products that have been sold. We had a bit of spike on the VIX, and there was many questions on the trading community, Discord community. People were saying some funny stuff, but at the end of the day, as always, when the VIX is expiring, you do have like a tendency to go for the new contracts. On Wednesday and Thursday, we saw a spike in short-term volatility. And after that, with the numbers and more importantly, with Powell a bit more dovish, that was the compression of volatility. But make no mistake, it's the same play as usual. We were on Friday, meaning the 0 day to expiry were very, very strong as well with the weekly call. So we had, I think it was the second biggest volume in calls in all-time high. And the market is pretty much the same, driven by the same names, and the retail is using calls very actively. So let's go into the technical analysis, starting with the S&P futures, where the trend is more or less the same as before. We are trending higher, grinding higher. We are close to the all-time high. If you look at the Nasdaq, we are having the more or less the same picture with actually a bit of selling off. As I said, we are not talking like a big move. We are talking 4% from the all-time highs, and we are still above the 50 days moving average. So the trend is still your friend here. But the Russell really strong there, as I said, on Friday. Why? Because it's Powell and the dovish tone from Powell. We are still way below, or let's say some below, from the all-time highs, but a strong day. We'll have in actually decent volume, as you can see, above average volume, which is a good sign. Now looking at the euro dollar, we are at 117. We have been hovering between 116, 118 for the last few weeks. Not much of a direction so far. I want to flag, obviously, the Fabulous 7, which have been struggling over the last couple of weeks. So we have been flagging the underperformance that we had. So this, you see it's only a small tick, and actually we have been bouncing on the support that was before a resistance, but really we are now waiting for the NVDA earnings that will be coming this week to give us more clarity. But rotation into the market, and this is what is the call these days. Going back into what happened for the week. So this is the chart first of the S&P. As you can see, we have been trading lower the whole week, waiting for Powell's talking on Friday. And this is the the 80 points move on the S&P futures that we had in one go, and then we stopped at this level. So more or less same picture, Friday 0 day to expiry calls. We had actually good numbers from the flash PMIs, both in Europe and the US, like worldwide. And actually, if you look at the comment from the market, you can see that a strong flash PMI reading for August adds to signs that the US businesses have enjoyed a strong third quarter, and we are talking a 2.5 annualized rate for the GDP. So we are into the 2 to 3%, which is pretty good. This is not staggering, but that is pretty good. So not a recession for the time being. I want to discuss as well this rotation that you can see here. You see the S&P, so this is the performance here for the day, and the right hand side that will be for the week. And as you can see, anything that is momentum has been underperforming the overall market. Nasdaq underperforming, most short rolling, some highs. So, and the retail as well a bit struggling. So rotation into new names, a broadening of the performance of the US market. We had as well some housing numbers that were okay. So overall, the macro picture is okay in the US. So what about the moves going forward? Because this is what we are interested in. First big one is obviously we're gonna have NVIDIA. Here, this is NVIDIA at the close on Wednesday. So this is the NVIDIA earnings, and for this week, I only wanted to put one chart, which is this one. So I wanted to look at the NVIDIA implied volatility versus realized volatility. And very often when you start trading, you do have many questions and say, look, Greg, it's a bit of magic when we look at the implied volatility from the options market. How are we doing those things? And what you should be doing, as always, is you should be looking at what has been the historical volatilities, past volatilities, because, this is how the market is most of the time pricing here. I think this is a very good example where, as you can see, the realized volatility for the last earnings for NVIDIA stands at 5.9%. And guess what? The implied volatility from option from these earnings on Wednesday after the close is at 5.8%. So guess what? It's more or less the same. What has been interesting is normally we should see implied volatility that is a bit higher than realized volatility, because you overpay, because you're scared that the stock is going to be moving more than usual, and because of the tail. But these days, because of compressed volatility, actually this implied volatility is below realized volatility. So another thing that I think is interesting, as you can see in this chart, is actually most recently the stock has not been doing fantastically well over the last year. So let's see. Obviously there is a talk about China. Not China, can they sell to China? Semiconductor rotation. So this is the big move for this week. So that will be for the Thursday session for NVIDIA. But as well, as you can see, you do have like some interesting other names that goes from retail into snow crowd strike. So many names as well for this week, a bit less than usual. What else do we have? We do have like the building permits on Monday, but really the big number is the PCE on Friday. So this is for your inflation. You don't want to see a picking up of inflation, because that means the odds of a cut in September are gonna be lower. As well, a bit of University of Michigan sentiment. And finally, as always, you do have like the Fed speakers and a bit of bond supply. Should I say a bit more than the bond supply, because you're roughly gonna have more than 200 billion coming into the market from the 2 years, 5 years, and 7 years. So as always, look at those bond auction that happens at 6 p.m. London time, 1 p.m. New York time, how the bid is, or how those auctions have been bid, and if there is enough demand, and how the yields are going to be moving. Finally, as well, end of the month. So that means we could see some funny moves on Friday for the close. And for the weekly moves for the S&P, always looking at implied vol versus realized volatility. As we saw before, The VIX is roughly at 14%. The 9 days volatility is compressed as well. So that translates into a plus minus 1.2% move on the S&P. So if you think about it, that is a 70 to 80 points move for the S&P. This is literally the move that we had on Friday. So you can see the market, not moving much, and suddenly on one move, on one news, the market moving the equivalent of the weekly expectation. So this is it for me for this week. Going into what we have is the 4x4 video series. This is for your education. We do have like the mentoring as always, as this is back to school season. Had many emails of when, do you have space, Greg, for doing the mentoring in the next 3 to 6 months? We do have like a bit of space, but if you want to do it, you have to be pretty quick, especially if you are from the US and Asia, because those are the most difficult allocation that we do have. Any questions on the process or the mentoring, or if you want to join the trading community where we have roughly one free channel, but we have 30 channels beyond the paywall. So if you want to join for your back to school and your learning, this is probably the time to do it. Any question, greg@duponttrading.com. And this is it for me for this week. Have a good trading week. Bye-bye.